Today is Monday, March 20th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains this morning, Mark, what key factors will drive agricultural commodities this week?
Well, with the next major USDA report almost 2 weeks away, I'm afraid the macro landscape is likely to be the major driving force this week. Of course, we have the Federal Reserve FOMC meeting that concludes on Wednesday. The big news over the weekend being the UBS purchase of Credit Suisse, that with some assistance from the Swiss government. The hope here is to bring some stability to the global banking industry and restore consumer confidence. Time will tell if these efforts will be successful, while hoping we see no other financial institutions start to wobble. We've seen a pretty heavy dose of risk-off trade the past 2 weeks from the speculative traders in the agricultural space. The CFTC is getting close to being caught up with their commitment of traders' data. So hopefully by this Friday, we'll get caught up through trade as of this Tuesday. We've seen a huge pullback in the speculative long position in corn. Their long position now is down to its smallest level in 2.5 years. And I think the next few CFTC reports will show a big drop in spec longs in the soybean complex as well, particularly soybean meal. While at the same time, the speculative short position in wheat has probably been trimmed a little bit as well.
Mark, specifically for corn, what's your near-term price outlook?
Well, I think spot corn is going to remain range-bound as we lead up to the March 31st stocks and acres report. The recent sell-off down to the 605 level being the low end of the range. This sell-off down to this level did exactly what it's supposed to do. It stimulated some demand as China bought just over 2 million metric tons of U.S. old crop corn. Demand for U.S. corn will likely going to remain strong here for the next few months until we await the arrival of Brazil's second corn crop. So, well, much of central Argentina is expected to see some pretty good rains this week. It's likely a case of too little too late, as damage from this year's drought has pushed the crop rapidly towards maturity. So the top end of the range, I believe, is going to be around the 650 level. On new crop, I look for D's 23 corn to also remain pretty tightly range bound as well, 550 to 565, what we're looking for there.
Mark, same question for soybeans. What's your near-term price outlook there?
Well, soybeans have fallen further than I've been expecting them, largely from this risk-off liquidation. Also weighing on soy prices is the big collapse in soybean basis in Brazil. As their record harvest advances, their ability to store the crop, or the lack of their ability to store the crop, is what's really been weighing on cash values here. Most harvest estimates are up around 60% complete. That's about 10% behind the normal pace. So look for good progress this week as weather conditions dry up a little bit. I look for old crop beans to stabilize here above the 1450 level, and eventually I think they'll trade back up to 15, maybe 15 to 25, 1550 level, again, simply from lower production coming out of Argentina. New crop range bound there as well. We dipped under $13 this morning. I look for us to bounce back into 13 to 13.30 range into month end.
Alan, turning to the financial markets, what major reports are scheduled for this week, and how do you see them affecting the markets?
Okay, well, first of all, on Tuesday, we'll have the February existing home sales just at 4.17 million. Of course, the main event is Wednesday with the FOMC meeting. And a statement will be released at 1 o'clock Central Time. And as usual, we'll have Fed Chair Powell holding a press conference at 1:30. Thursday, we'll have new home sales just at 645,000. And then on Friday, we'll have durable goods guessed at up 1.5%, and the March Purchasing Managers Manufacturing Index guessed at 47.2. I think most of these reports will probably come in weaker than the estimates.
Alan, looking at that Federal Open Market Committee policy meeting on Wednesday, I guess the question is, will there or won't there be a 25 basis point increase this week?
Well, I think there will be a 25 basis point hike. probably this could be the end of the rate hike cycle. So I'm looking for 25 basis points on Wednesday. There's a smaller probability of no change at all. But also there's more evidence and some of the statistics pointing to the possibility of the Fed actually cutting rates later this year. So even though there's somewhat of a split opinion on what the Fed may do as far as no change or a 25 basis point increase, I'm going to have to go with the 25 basis point increase.
Lastly, Alan, what's the near-term price outlook for stock index futures and for interest rate futures?
Okay, they both look higher, at least in the near term. The stock index futures have performed very well in light of the, or I should say, in spite of these banking sector questions. But anything that's going on in the banking sector or has been going on could result in some additional flight to quality, and that was the case in the interest rate futures market. So while the stock index futures will probably trend higher, I think the better long and the better buy, I think, is in the interest rate futures markets, where there still is a flight to quality component. And I think the best part, or the most bullish part of the curve, is the 30-year Treasury bond futures, which just today in the overnight trade advanced to a 3-week high. Of course, there has been a bit of a pullback today, but it's the interest rate futures markets and especially the 30-year bonds that I think have the most upside potential.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.